In this video, we're going to talk about the bull and bear case for Tesla. Before we talk about the two different cases, let's look at the charts. This is the weekly chart, and you can see how price bounced off of the daily buyers level at $200. Also bounced off of the 200 weekly moving average. However, current price, you have these two rejection wicks. They call those twins or tweezers, and could represent at least downside risk this week coming up. Now, let's talk about the bull and bear case for Tesla. And let's scroll to the top of the article. Tesla bulls and bears agree on one important point. So Elon Musk has done a good job of creating a varied mix of Uber bulls and Uber bears. The difference in opinion largely comes down to current realities versus estimated upside. With the bulls confident that the Austin company's potential is enormous at every level, and the bears sure of their stance that Tesla isn't too much more than a car company. Well, in that case, the bears already lost because Tesla is a tech company disguised as a car company. HSBC initiated coverage of Tesla last week with analyst Michael Tidal granting the stock a reduced rating and a price target of $146. So that's roughly another $100 downside risk from current price. Tidal, citing greater than anticipated expenses around Tesla's non-car related projects, said Musk himself represents a unique single-man risk to the company. Bernstein analyst Tony Sacconaghi likewise said the stock has more room to fall rather than grow, with a price target of 150. So that's the second analyst that has a roughly $150 level price target, well below current levels. He explained that Tesla stock is an extremely difficult one to call, as so much of the stock movement has little to do with actionable numbers coming out of the company. Now, consensus earnings estimates for this year, he told CNBC, have halved to $3, and yet the stock is almost double from the beginning of the year. I think that's very challenging for investors when numbers generally come down and the stock is actually gaining ground. He also says that the key factor behind the inverse relationship between earnings and estimates, reports, and stock movement is investors continuing to believe in Musk's long-term Tesla vision. Within that vision, automobile autonomy is solved. Cars drive themselves with true safety and regulators approve, creating an enormous new business whose market Tesla will dominate. And we haven't even gotten into the energy pack business. Saganagi also says Tesla may well have to start cutting their targets in 2024 and 2025, which could hinder the long-term growth of the stock price. Tesla could have pretty modest unit growth because they're not going to have new models, and they're struggling to grow now without doing major price cuts. Now you have this gentleman, Gary Black, manager or partner of Future Funds, who wrote in a post Tuesday that the bulls should reduce their expectations that Tesla will be able to maintain that 50% annual growth rate. Black has a price target of 300 for the stock. All right, so you got two bears, one bulls. Let's just zoom out to the monthly chart, and you can see this massive head and shoulder. His target is $300, which it already hit back in July, and that level served as resistance, and then it formed another resistance level of 280, and we can probably see that a little better if we go down to the weekly chart. You had resistance and price came back up, and price nearly came back up again to the level, which shows that there are sellers waiting for price at the 280 level. However, price is in a tight range for Tesla purposes, $80 range, and it's been in that range since June. So, a breakdown of and below 200, yeah, we could go down to this next level down at the 140-ish level, and a break higher of $300. Well, that'll be a breakout to resume approaching all-time highs. Target at around 380. Going down to the daily chart, you have price above that 200-day moving average once again. However, the 50-day moving average is pointing down, and at some point it may form a depth cross. That's where the 50-day moving average crosses under and below the 200-day moving average, which is in yellow. But right now, prices has been in a range bound for the last week or two, between say 225 and 245, so in a $20 price range. You do have, I guess you could say that gap got filled, but you do have a gap to fill on the downside, roughly at 224. So be interesting this week and really next month, going into the end of the year, as we are within a Santa Claus rally at the moment. Thanks for watching. Subscribe. Please like the video.